Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Now, I'm going to start today's show by apologizing for missing the past two shows, Monday and Tuesday. I know my fans are depending on me for these shows, and I had some other things going on. I had a big donors party to go to, and on Monday, and then went camping Tuesday, actually. Kind of fun. So today is Wednesday, March 27th, 2024. This week, most interesting data coming out will be Friday, the PCE data. Now, if inflation still seems too hot, we could see expected rates to be higher. Maybe we are going to see no cuts. Should I? I was the one, a while ago saying, I still think we're going to see 6 cuts this year because I think things are going to slow down faster than everybody else. Meanwhile, some of these guys that I've been listening to have argued the other side, saying, we don't see it. You don't really. I think the lesson I learned through this little period is don't count your chickens before they hatch, kind of a scenario. I'm depending on a slowdown, and there's just not enough evidence of a major slowdown yet. We all know it's coming. The unemployment levels are going up, or they're ticking up. They're the higher lows. If you saw that video that I talked about that, and the consumers feeling constrained. All these CEOs of Target, Walmart, they've been sounding the alarm bell, saying the consumer's out of money. The consumer's out of money. The slowdown. I think the slowdown's still coming. It's just like, when is it going to become blatantly obvious? So if PCE data, for example, comes in. See, this is the interesting part. We're now in a period where if PCE data comes in like super cool, like way lower than expected, forever, for a very long time now, when inflation is low, it's like, that's great for stocks. They're going to go up now because we can cut rates, and that makes stocks automatically more valuable. But we will get to a point when inflation is so low that it starts making people think, it's called runaway disinflation, deflation, and this is what happens in a recession. This is what happens in a depression. It's funny. Inflation is a two-edged blade, because if you have inflation going too hot for too long, it's like things can get out of control. It can spiral out of control, and you can have major chaos. But it can also go the other way when things get too cool, when things are cooling down too fast. That's when you have your recession, depression. And the idea of when inflation's high, we want to bring it down without bringing it down too far. That's why people keep talking about a soft landing. That's what a soft landing is when you bring inflation down and it doesn't go down too far to the point where we're in a recession or a depression. And so we're still in inflation mode, and we're ticking down. We hit 3%. It's like, okay, are we going to go back up, or are we just going to level off and great, land an airplane just perfectly on the highway, the runway, or is inflation going to tick up and going to go through another thing, or is it a crash? Usually it's one or the other. There's no such thing really as a soft landing ever. Pretty much. Look into the history of it. It's a little more complex. On to the charts. Now, I had been talking about how the S&P 500 and the Qs, the NASDAQ, have been breaking out of this, wedge pattern. It's a pretty strong indicator that, the Qs were going to go down. We broke through this trend line. We confirmed it with a candle, and I finally learned what Gareth means by a confirming candle. I thought it was just meant that you close below that line, but actually you have to close lower than the previous entire candle that broke the line. And I'll show you the example. Again, watch Gareth's show if you want to really get into charts and stuff. Verified Investing, Gareth Soloway, he's the man, for chart patterns and these kinds of things, for trend lines. He knows a lot more about charts than I do, but I'll still share some of the things that I learned from him. So this is his trend line here on the S&P 500. Now I was confused back halfway through March when we broke through it, and I thought that this meant we confirmed it because we didn't get back into it. But in order to confirm it, you need the breakdown candle. We need a confirming lower close than this candle right here. And so now we have very recently, it was March 25th, I guess that was Monday, it broke, and then Tuesday this did confirm it because we had a closing below this entire candle here. And so now, and supposedly we basically are retesting this line today. So this is his confirmation that yes, the Nasdaq, the S&P 500 has topped, and we're going into correction mode now. We should be seeing the S&P 500 as well as the Nasdaq to continue to break down from here. And so, yeah, so that's that chart. So, and again, it's important to realize that we're talking probabilities. Patterns like this and Head and Shoulders and many other patterns, they have a very predictable ratio of outcomes where it's like 75% of the time, this happens, but then 25% of the time it doesn't happen. It reverses, something gets messed up, it just does something unexpected. And so what he says is this pattern has an 80% chance of playing out the way that's expected. And I think it's important to realize that in this case with the S&P 500, well, how come everybody doesn't just realize this and know this? Well, think about your stop loss here. If we go back to this chart right here, so this was our confirming candle. So let's say you went short here. Well, guess what? You already lost a lot, and then you could continue bumping onto this line as it goes higher before it really does break down with the 80% probability. But the house winning against that trade idea, you can still lose the trade even though the probability of the outcome is well known. And so just because you have 80% chance of winning, it doesn't winning the pattern doesn't mean that you're gonna necessarily have it work out to your favor 100% of the time. And that's where that 20% comes in and really screws you over. But all right, I digress. I wanted to add some charts that actually go against this narrative. Funny enough, high yield corporate, I always love looking at high yield corporate. What are they doing? They still don't care. They're going high. If anything, this looks bullish. It's like the markets are strong. Like, high yield corporate does not see bankruptcy coming, and it just gives a lot of strength to allowing people to take risks more comfortably. And so that, along with a lot of other charts, let's keep moving on a few other charts. So the XHB, this is the Home Builders Index. Again, like a flag pattern here. This could be considered a breakout from that. And we could see this. This is a very bullish looking chart. And then the VIX, last time I had a show, I talked about this breaking down this candle. Oh no, I didn't talk about it. I didn't do a show Monday. But I said that we could easily break through it, and we broke through it on Monday, but then we closed below it and we're still low. So this is the VIX, this is the risk index. When it goes down, generally the stock market goes up. And, you know, this is also showing strength here. And then another one that I like to follow that I've been a little surprised by as well is wood. Wood is just, it's going up, it's going up. This is very strong looking. So, you know, overall, you know, I'm 40% bonds, something like 15% cash. I have like a bunch of stuff that I think is undervalued, and then I have 5% shorting the market. And it's, you know, these other charts give me caution on that, but the thing that allows me to feel comfortable about shorting right now more than anything is just how out of hand a lot of valuations have gotten with the S&P 500, the PE ratio, and the expectation that I have of a contracting earnings coming, which will come eventually. The market can't beat the Fed. As hard as it can try, it can't beat the Fed. The Fed will win. That's where the phrase comes in. Don't fight the Fed. I think being excited about stocks right now is fighting the Fed directly, and I'm happy to be on the other side, you know, with a large amount of TLT, 0Z, long duration treasury bond exposure, and some shorting. You know, I've been getting hedges along the way. A lot of them have failed. Somehow overall I've still outperformed the S&P 500. I don't even know how I did it at this point. But, you know, I'm still comfortable here because you know, I think we're extremely due for a correction, you know. Along with everything I just said, you know, that with the S&P 500 just going like straight up in a line, you know, the chances of it going straight down in a line, I think, are pretty good from here. Again, where we are in the business cycle. The Fed is strangling the economy. The economy is saying, no, everything's great. We're just going to keep ripping higher. I don't believe it. I'm a bear. I'm a bear until the markets break, and that's it. Anyway, moving on. Speaking of treasury bonds, this is a chart of TLT. This is a ETF that holds a lot of treasury bonds, and I just noticed today we had a pretty nice big green candle heading up towards this trend line. It'll be interesting to see if we bounce back off of it, or we finally break through this. If we do break through this, you know, I still do see this as a head and shoulders here. Shoulder, the head is higher, you know, than that side. I mentioned in another show, I'm not sure if this is exactly a head and shoulders, but you know what? To me, to my eye, it looks that way. And I actually do expect this to break here, but I'm not so confident in it that I'm going 100% into this, but I'm 40% in this, and so, you know, the thing is, like, that's really important to remember as well is that the yield curve is still inverted. It's not uninverted yet. And pretty much every recession that happens after uninversion, after the Fed lowers interest rates on the front end of the curve so much that the long end is higher than the short end. And there's going to be a lot of cuts that are necessary before we can see that. But usually the real recession and stock market crash happens after that uninversion. And so, but who knows? Maybe it will come sooner this time. It's coming. It's coming. It's coming. Let's get through my last few charts. Just another trend line I noticed on K-Web. This is a Chinese ETF. 1, 2, 3. This is not a head and shoulders, and I'm just going to show this is clearly higher than this head. This is like the well, this one's clearly higher, right? So you have your shoulder, your head has to be higher than the two shoulders. It should be little shoulder, big head, little shoulder, and then you break it and you go down. You know, this is not like that at all. This is to me looks more like a bullish pattern, but you know, we'll see. That trend line, if we break through it, you know, we could see another leg down in China. Last chart I wanted to notice that I wanted to point out was uranium, just because I've been following this market. I've made a lot of money in uranium. I noticed this as a actual real Head and Shoulders here. It looks like that developed with a very clear neckline, head, and we're on the right shoulder now. I think this is going to go down. I think we have another leg down in uranium. I'm hopeful about it too, because I'd love to get back into uranium at a lower price. This is a longer term. You know, the world needs uranium. Why not own a little bit of that uranium producing industry? It's sort of green. You know, it's a beautiful kind of energy. I hope we see more nuclear power in the future as well. I like being an investor in uranium, partly because of that. Like, how cool would it be if the United States suddenly said, you know what, we're just gonna have another explosive growth period economically. We're just gonna not rely on anybody else for energy and build like 30 more nuclear power plants. Like, that would be great. I'm happy to be invested in something I believe in as well. So thank you for watching today's show, and I'll see you next time. Robschild.